It is that time. Are we taking, I mean, are we?
I've been cold all day.
All right, so I'm going to call us to order at 6 o'clock. Everyone is here except for Mike, and he is going to be absent. He's not feeling the best, so. So we have a quorum, and Billy, will you lead us in prayer?
Dear Lord, thank you for today. Thank you for your many blessings that you give us. Father, we ask that you forgive us for where we don't do what we're supposed to. Father, we ask that you lead and guide us through this meeting. We ask that you give us the strength and the wisdom to make the right decisions for this district, and forgive us for all that we don't do. Father, bless us as we go through the rest of the meeting. In your name we pray, amen.
Pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Honor the
Texas flag. Pledge allegiance to thee, Texas, one state, under God, one and indivisible.
Okay. Open forum. Do we have any? No. Have anybody? Okay.
You want to go ahead and skip these public forums? We'll come back and let Mark go ahead and do it.
If y'all want to do that, that's fine with me. Okay, so let's skip ahead to Mr. Okay. Do you want to introduce Mr. Kyle? I don't know, because everybody's a name.
This is Mark Cowell. He's our auditor. He came on, what was that, was it Monday he came by? We visited, and so he's here tonight to present the annual financial report.
Thank you, Jason. And thank you, Stacy. If y'all will turn over in your audit report, page 3, this is the certificate of the board. And Stacy, if you'll entertain a motion to accept the audit report at the end of the presentation, then I've got a sheet in here that I'll have you and the board secretary sign so I can send it off in a PDF to TDA. Then we've got pages 4 and 5. This is the independent auditor report. This just means that everything's fairly stated in accordance with generally accepted accounting principles. It's a clean opinion. It's what TDA is looking for. Pages 6 through 11 is what we call the management discussion and analysis, or Mdna. And it's basically somewhat of a narrative of what I'm going to go through in the audit report. I'm not going to bore you and read everything in that, but I'm going to go over all the numbers with the board and try to get you up to speed. And if anybody's got any questions throughout the audit, feel free to ask, raise your hand or whatever like that. I'll be happy to stop and explain anything. These are real complicated reports, and so it's a lot to grasp in this thing. Pages 13 and 14, these are what they call the statement of net position and statement activities. These 2 pages over here are things that Richard doesn't necessarily keep. The A1 over here, the statement of net position, these are all the balance sheet accounts that the district has from the general fund, special revenue fund, debt service, workers' comp. It's got them all added in there into that, and then it's got some other things added to it. The next things that they're the capital assets, your land, buildings, and furniture and equipment, net of depreciation. And I'll bring you back and forth over here. If you turn over to page 34 in your audit report, this is the capital asset activity. When we first started doing this stuff, these type of audits where we had to do that government-wide sheet in here, we had to estimate the value of buildings and when they were bought, when they were first put on. And so, and I was here when we first did that. We had to go back, and even that elementary school that's downtown, down the middle of town on Oped, I think is what it is. And then if you didn't know when it was bought and how much you guessed at it, and you put it on the books. And since then, we put on buses, buildings, addition, the football field addition, this building, anything you did in the high school, et cetera, the new elementary school, et cetera, like that. I don't put on band instruments or desk chairs, computers. I don't put any of those things on there. And I don't put on like a new roof or whatever, because I consider that as a repair and maintenance item. But those are the things we put on there. This last year, the district bought one bus for $104.50, and we added that on there. And then we have to take depreciation on those items in there based on what the function that it goes on. You can kind of see the different functions. The buildings and improvements for education are mainly like or instruction. If you have this admin building, that would be for administration, for the admin, function 49. At buses can be either function 34 or 36. If 34 is transportation, 36 is extracurricular activities, and so forth. And so we added those on there. So your total assets that we have on there is $14,335,000, and the depreciation that was taken today is $9,126,000, leaving a net after depreciation of $5,209,000. So that $5,209,000 is what these three numbers over here on page 13 add up to: the 85, the 47, 35, and 387. That's what it gives you an idea of what that is. The next thing that's on there is the district's debt. And so there is, and you see in the bottom, in the middle of the page, we said that due within the current year, $283,740. That's your current year payment, principal payment on your note. And then the long-term portion is $7,938,000. The note, the bond payment schedule is on page 35 and 36. The district started out with a balance of $7,306,000, and it paid one payment of $294,000, so it left $7,012,286. And then there's the principal payments down there at the bottom of page 35. Included in that is that these bonds, or what they call, they have a weird animal, they have accreted interest. And that has to do with the way the bond was floated and everything. And so over here on the right-hand side on page 36, in the middle of the page, it's got the $7,012,287 plus $272,391. That's the amount of accreted interest that gets added into the principal payment. And so the total bond payment is $7,284,000. And that $7,284,000 equals the $283,000 plus the $7,938,000. Then right under that is what we call the pension expense. And then for you new board members, this is something that's got, the pension liability is $1,858,000. And if you turn back over on page 38, this is a required part to put in an audit. This is on the TRS pension. TRS, they estimate their pension liability on page 38, $218,974,000,000. They have assets of $165,416,000. And so that means that they're underfunded $53.557 billion. And so based upon that, you're going to see Sanford Frisch's pro rata share of that is $1,858,000. Now, it doesn't mean the school doesn't owe it. It's just part of that for disclosure purposes to tell you, put you on notice that the TRS pension plan is underfunded. And what they've been wanting to do, if you turn over on page 39, the contribution rate at the top of page 39 is 7.7%. When I first started doing it, it was 6.7%. Then it went up a 0.5% or whatever, now it's up to 7.7%. And so we want to bridge the gap and take more from the members that are contributing, the teachers or the administrators that have contributed, and put more into the plan to try to close that gap. Part of the problem is nowadays, there's so many of these baby boomer people that are retiring, and it's hitting the system so hard. And so they're not being able to catch up with what they wanted to. And so it's still underfunded.
Will they ever recoup that?
Is what
When they retire, will they recoup that extra? The 7, you say 0.5% or whatever?
I still didn't hear, it was talking real low.
Whenever, you know, they raise the percentage up,
Uh-huh.
will the teachers, when they retire, are they gonna recoup that amount?
Yeah, they're still gonna receive it, up there, yeah, but they're just funding it, it's just like it's underfunded, just like they say Social Security's underfunded. You know, that you put in there, and then, you know, if they keep on going like they're going, you know, maybe they could go broke, but they'll do something, the state will kick in or whatever, they'll start raising the rates, and I think the rates are expected, somebody told me they're expected to go up a little bit too, to either almost 8%. And so they're going to just bridge that gap in there on it. But there's a lot of work in this, just for this part of this disclosure, that's real complicated. There's some expenses we have to put in the financial statement, pension expenses, and put all this stuff in here just for this. The next thing underneath that is this called this net Oped liability, which is $2,197,000. Okay, Oped stands for Other Post-Employment Benefits. And what that is it's the TRS care insurance plan. Not the one, not to be confused with the TRS active care that the current employees are on right now, TRS active care. This is TRS care. And these are the folks that have retired from service that are on this plan, but prior to getting on the Medicare age 65. So those people that are in that group in there that retired from service, they're on this. And so if you look on page 43, they say that this plan has a net liability of $40 billion, and they have not quite $2 billion in assets. So it's grossly underfunded by $38 billion and some change. And so it means that the people that are on it have to get a supplemental insurance. It's not going to be as good an insurance as what they're receiving now while they're working. They'll have to either pay more in premiums or the deductibles higher, etc., like that. You know, it's not as good as what they're getting. I have talked to one person today, and she said most of her TRS insurance was out of network here, and so she wasn't really pleased. You got to get some doctor's referrals and things like that, and there's a lot of times it's just out of network, and some people they're having a hard time getting to accept it, and she was a current employee. So anyway, that's the Oped liability. The next thing that's on there, you can just skip it down towards the bottom of the page, your net investment in capital assets. That's got a negative $2,075,000. So that's the amount of these assets that's up there at the top, which is the $5.something million. Yeah, 5.209 minus your debt, the $7.2 million in debt. That'll give you your net investment in capital assets. Normally that's a positive, but since your debt's still high and your assets are going down because of depreciation every year, then it comes down. The next item is your fund balance and debt service, and then your unrestricted fund balance is a negative $1,076,000, and that's just what's left over. I've had some districts, if this total net position at the bottom is a negative number, I've seen them get letters from TDA telling you that you need to work on getting that number up. But it's really hard for places like here to do that. You don't have a big wind farm or something like that to come in, and because they're taking off these OPEB and pension liabilities off of that, so that's like $4 million that just comes out of your financial statement that you don't have any control over. So that's what it is. Then the other page is the B1. These are all of the financial statements that Richard keeps, the expenses on there, plus some depreciation, pension expense, et cetera, like that, and that's 10,430,000, and then it's got your revenues down there, and it had a net change, a decrease in your pension, of your, not pension, but your other activities, of $732,000. So it decreased from last year, 2,208,000 to negative 2,941,000. Then we get over to page 15 and 16. These are what we call the fund financial statements, and these are the financials that your business manager keeps. Going down for the general fund, you had cash of $536 and investments of $3,271,000. Those two are added together. You've got property taxes delinquent of $308,000. And then an allowance fund collectible of $67,000. Then you have to do some due to other funds because of these special revenue funds that got some money from the federal government in September. Probably most of it was in September, I believe. And then but Richard got to spend it in August. So he spent it, but you have to borrow it from another fund in order to pay it. So you have to borrow it from the general fund, and then you get the money back from the federal government after the first year. So that's what that $250,000 is. Then you have your approved wages of $248, due to other government at $265. That's a prepayment on your foundation revenue. The state pays you, just starts doubling out the money. They estimate your foundation revenue based on your ADA and your tax revenue. And then when that comes in, if one of those falls short, if your ADA goes down, then they overpaid you, and that's what happened. Their ADA went down, and so they overpaid you. And so instead of getting the money back, they just say, you keep it and we'll move it to next year. And so you just count it in revenue in the next year. It's basically what we call deferred revenue. You just count it in the next year. The unavailable property tax revenue is $240. That's the amount of property taxes we expect to collect in future years. And if you do that, look at the top of it, that your DTR, property tax level 308 minus the 67.4, that equals the 240. That's the amount that we estimate that you'll collect in future years. And then your fund balance is $3.538 million for general fund. And then that major special revenue fund is one of those escrow monies that you got $116,000, you spent it, and you had to borrow it from the general fund. Page 16 is a reconciliation of your total of all your fund balances at the top, the $3,749,000. This is the same number that's on the bottom of page 15 towards the right, the total fund balance, $3,745,000, and it reconciles down to your net position that's on page 13 and 14 of a negative 294,126 in segment activities. Page 17 and 18. This is the segment of revenue expenditures. For the general fund, you collected a little over $8 million and spent $8.7 million. And then you had a transfer out of $48,272 that goes to the cafeteria. That was to fund the deficit in the cafeteria, and that goes over to the special revenue fund, Fund 240. It goes into that. And so you had a net decrease in your fund balance this last year of almost $700,000, $699,442. So last year's fund balance of $4,237,000 went down from that to 3.5. I know you had some unexpected repairs this last year. You did buy a bus. There are some other things that kind of help offset that. You got some federal money that was able to offset some expenditures. From the federal money, the guidelines for that were that you could use it for salaries and whatever. And so Richard made an increase to do that. I reviewed those, and so there were some things that helped. It could have been worse if the federal money hadn't come in. Anybody got any questions along the way, feel free to shout out something. Then on page 18, this is the total of all the fund balance, the changes in the fund balance is 676, which is over here on page 17, and it reconciles down to that change in that position that's on page 14, so minus 772.93. Pages 19 and 20, this is the workers' comp fund. And basically all you have in there is cash. You've got almost $250,000 in there, 224, 250 in there. It has a little bit of earnings in there, and spent $200 on it, so it went down. We went down a little bit, $122. And this money is basically it's the schools. And one day when Richard decides that we don't have any liabilities left in workers' comp, we could make an increase to move that over to 199, the general fund. Isn't that right, Richard? Then on page 22, this is the student activity funds. This is, last year they had something new this year, so that you have 21,000 in your activity fund. Somebody decided that instead of having to do the student groups, which it is, it's a restricted net position on it. So we have to show it as a restricted net position on the $41,000. And then on page 23, this is a new form that you have to show the ins and outs of the activity funds. And so they collected 89,000, spent 108, and then so it went, the cash went down almost $19,000. And so then since this wasn't on there last year, it's called a prior period adjustment. So to put the beginning balance of that fund on here, of the 60,072, it went down from 60 to 41. Then we get over here to the footnotes, the rest of the footnotes. Let me go through these and see if we've gone over some of these already. We went through all the bonds and the capital assets. We went through the pension stuff. In page 50, at the top of 50, your health care coverage. The district pays $300 per month per employee to the plan for health care. SHARS, this is at School Health and Related Services. The district paid $123,148, or received $123,148 for SHARS. That's from the federal government. And then the deferred inflow resource. This is what I went over on that C1, this deferred inflow. That's that deferred, those are those taxes that we expect to receive in future years. And that's back on page 15, the same numbers. That's the unavailable property tax revenue. It's just spelled out what it is. Due from state agencies. There's nothing due from the general fund, but these federal grants and the special revenue, there's one of those major programs that had $116,000 due, and the other ones are $133,000. So we have $250,000 that we have that you got in September or October that you got in that you had to borrow from the general fund in order to balance out that fund. Pages 51. I like this one here. If you turn back over, keep your hand on 51 and go back to page 17. This is the revenue from local sources, which has got like the local revenue going down the general fund. The local revenue primarily is property taxes revenue, and then you have some co-curricular activities and some other revenue. So that's $1,516,000. And so that's the same number that's at the top of page 17 in the local 5,700 category. The other two items on there are special revenue. That's food service, that's food sales. That's how much you collected from the students and teachers. going through the lunchroom. Debt service is primarily taxes, that's $360,000. And then the total local revenue was $1,995,000. And that's the same number that's over here at the top of page 17, the $5,700 column. Shared service arrangement, you belong to an SSA and board group, and the district contributed $224,000 to that. There's a new accounting procedure, and then this prior period adjustment, that's that $60,000 I was telling you about that was on the custodial funds or student activity funds. Then page 53, this is the scheduled expenditures and revenue for the general fund compared to the budget. And what you go into the third column over here, the third column, those are the actual numbers. And those are the same numbers that's on your C3. That's on page 15, or 17. And so, and then what we try to do is check to make sure that you didn't overspend the budget by function in there. And so if you look over there to the far right, none of the numbers are negative, so the district was within the budget throughout the year. Your total, your budgeted fund balance at the bottom would have been $2,536,000, and it ended up at $3.5 million. So you were under budget, $1,002,000 for the year, which is good. The TDA look at this one, if you go over the budget, they don't want you to do that. Then page, let's see, we'll go with combining statements for page 61 and 62. These are all the special revenue funds. They're ins and outs of them. Some of them didn't have any balance sheet accounts in them. The ones that did is lunch, food building, and then these other, it's 266 and 281. Those are the ones of those ESSER funds that are from the federal government that they got come in this last year. And those all balance out. Richard does a good job on these special revenue funds. They all balance out. And on page 63, this is your debt service fund. You have cash of over $200,000 in it, and then your property taxes delinquent were $66,000 and $10,000 estimated for uncollectible. And then the unavailable property tax was $56,000. So you got $210,000 fund balance in debt service. Page 65 and 66, these are the ins and outs for all the special revenue funds. And these are what they're supposed to do. They're all supposed to go out like this. You're doing your job right. You get the money and you spend it. Because you spend it and then you ask for a reimbursement. And Richard did a really good job of recording all these on there. The one to know in there in the middle on there from 240 school lunch program, the district had to kick in $48,000 to offset the deficit in it. And all the rest of them, they spend what the budget is, or what they receive. Now on page 67, this is the debt service fund, you collected $587, paid your note payment, $294, and then the interest on it. And so you had an increase in the fund balance on it, $22,000, so then the fund balance of $210,000. Page 69 and 70, this is your scheduled delinquent taxes receivable. These are all the years from history that we have to show the first, last 10 years. You have a tax, your tax rate for this maintenance and IMS was $1.35.3 for MIO and $0.28 for IMS. Your tax appraised valuation was $128 million. Taxes collected was $1,687,000. For well, that was the levy was $6,600,000. For the collections, for the total collection for all the prior years was $1,321,000, and then debt service collected $351,000. And so your total uncollected is this $374,996. That's the total of all the years like that. And then that same number is on page, if you bear with me, I hate to keep you going back, but this is how you understand it. It's back on the balance sheet on page 15, which you see that same number on the property taxes, $374,996. But they're on the far right, but they're towards the top. That ties to this number here. And what I do to get that allowance for uncollectible, I take the oldest 10 years and times it by 0.6. And it gives me a number there, and I'll round it up to get kind of an even number on it. And so that's what I think it's a method, whether it's true or not, but I think it's going to be close. But that's how I get the allowance for uncollectible. Then we turn over to page 71 and 72. 71 is the child nutrition program compared to the budget. You budgeted $395,000 and you spent $394,000. So there's a budget water in that. And then on page the J3 is the debt service fund compared to the budget. And it was again the payments there were budgeted and they were running budget in there. On page 72. Then page 73, this is a new schedule that's in here called J4. And it's on state comp ed and bilingual. And we have to get the total up there. You have to keep written records for your state comp ed, and you have procedures for it. And then the total money that Sanford First received was $427,000, and then they spent $316,000 on state comp ed. What I'm told is that has to be, you have to spend at least 55% of it, of what you receive, and the district did that. And then on bilingual, in Bridger City, we don't have very many bilingual kids here. And there's 1,776 what they received, what the state gave you, and you spent $1,000 on it. Then we move over to page 75. This is what we call the schedule of expenditures of federal awards. This year, the district had to have what we call a single audit. And that's because that your federal revenue exceeded $750,000. And when that comes into play like that, and we did it was close, we received $801,000. But if you receive more than that, the government and the state PA requires you to have a single audit. And so what that means is that I have to do some extra work to check those funds that were on there, that were the single audit funds, and we check your ESSER funds, those ones that come in there, and I have to do analysis on 40% of the total to get up to 40% of those funds there. And so I have to pick enough funds in there to get 40% of the total and make sure that we have, we spend it right according to the grant. So we get the grant out and look at it, and these ESSER monies it was real broad of what you could spend it on. You could just transfer it, you could pay salaries with it, you could buy supplies, COVID supplies, you could do a thing, the ones you couldn't pay was debt service and some other election expenses and things like that. You can't do that. But it was real broad. I had one district that got in there that they let them approve buying a bus. And then I talked to Richard and said, we asked, they said no, we couldn't do it. And so I guess it depends on who you ask, but they allowed it and they showed me the emails where it is, so I allowed it and went on. But the person he asked said no, you couldn't do it. But it was real broad of what you could spend that money on. But he did spend it on some things that were good for the schools, that HVAC stuff, which y'all had done, and the federal government paid you for that, to have all that stuff done in there. And so anyway, we had to have a single audit, and I did check of those expenditures, look at the grant, check to make sure what we spent on, look at invoices. If it didn't have an invoices, it was salaries. We look at his payroll journals, and they all tie out perfectly. He was worried that they wouldn't tie out, and he gave me enough stuff. I said, "We're going to go, here you go, this one works, but you got to add 2 or 3 numbers together, and there you go." And it worked out. His records were good, real good. And so with that being said, then we went on there and we haven't had a single one. So on page 76, this is the compliance statement on internal control, 76 and 77. And so when you do this one, this is a standard one here. So when we get here, we look at your, we take a list of check numbers and we compare those check numbers to an invoice. And we can trace that invoice back to the books, the general ledger, and make sure that it all balances out. And it was all properly coded, it was in the right spot, it was nothing the very essence did. And we take a sample, random sample of those. We look at the bank reconciliations, we look at your TEA reports and make sure that what the TEA says that you owe them or they owe you when we get it recorded. We look at these payment schedules where on the special revenue fund, they'll put a payment report in there. This so much for Title I, Title II. We check a sample of those and make sure that those agree with those. We looked at the budget, make sure that you didn't go over the budget in any item, whatever like that. And so there's a lot of things that we do during the audit to make sure that Sanford Fruit's complied anyway. And so on page 77 at the bottom of the first paragraph there, it says, "The results of our test disclose no instance of non-compliance or other matters required to be reported in the economic thing." That's a standard report, and that's what you mean. I mean, he did a real good job. I had some on that we had some problems with, but not here. It's provided everything for us of what we need. The second one over here on page 78 is the compliance report on the single audit work. And so those are the ones I just got to explain was the grants. You had to look at the grant, look to see what it was for, what was allowable expenditures, et cetera, like that, and make sure it was spent in the proper format. And it was, and so we didn't have any problems on that. And then on this one here, it's the same thing that we at the bottom of page 79 said in the next last paragraph, we did not define any deficiencies of internal control of compliance that we consider material weaknesses. And so anyway, that's a clean report on that. Page 80 is the schedule of findings and question costs. We give an unqualified opinion on everything, and it lists the ones that you're a high-risk auditee because we didn't have a single audit last year to compare to. So everybody that was new this year, and there's a lot of districts because of the federal money being doled out, it pushed them over to $750,000. So it was considered a high-risk auditee. That means we had to audit 40% of what the expenditures were. And so the ones we did were the ESSER 1, ESSER 2, and ESSER 3. Those are the ones on there. And the dollar threshold is $750,000. Then page 82, this is the communication with those charged with governments. And this just means that we didn't have any problems in dealing with management or not. Anybody have any questions about anything at all? I'd be happy to answer anything. I know this is a lot to grasp. I've had an opportunity to go over this twice with Richard and one with your superintendent. I got to know your superintendent, like him, and kind of get along real well, and like that, and he's going to be a good fit for you. And so I wish him the best, and as he goes forward here. It's always a pleasure to come here. You know, as y'all the new ones know, I grew up here, and this is kind of like coming home to come here and do this audit here. And I'm proud of the things that y'all have accomplished, and to see it changes. And when I was in high school, this was a vacant lot. You know, all this stuff. There's a lot of changes that are going on and everything. And so, and I told y'all this before. There's a reason why my covers are blue. So,
does anybody have any questions? Well, thank you very much. We appreciate it.
Oh, you're welcome,
That's all right.
Chelsea.
And I'm glad they didn't give you trouble. They told me not to give you any trouble. And how many copies do you need signed?
Hang that motion.
Yeah, okay. All right, so if nobody has any questions about it, then we'll go ahead and do the motion, and so I need a motion. I'm sorry.
I move to approve the budget amendment for the 2021 budget.
Okay, I have a motion from Logan. Do I have a second?
Second.
Second from Doug. All in favor?
It should be this.
I don't think that was right.
That's not the right one.
That was the budget. That was the budget.
That's a
I wrote it on.
They approved the budget.
I move
Try
to
again.
approve the 2021 annual financial report.
There you go.
How about that?
Okay.
All right. Second?
Second that one.
All right. Okay, that one too. All right, all in favor?
Getting warmed up.
There you go. Well, I wrote it beside it like you did the right one, so that's how much attention I was.
So I need at least 2, preferably 3 signed,
I'm gonna give him this one here.
and then he'll have a sheet as well as.
This is one I'm gonna take back to the
Okay.
study.
Get yours signed too. That way. I take one, Maddie gets one, and you'll have it back up in case something.
Appreciate it.
Appreciate it.
Yes, sir, you too.
Rusty.
Good to see you, man. Good.
Thank you so much. Appreciate it.
Didn't mess up.
Appreciate it. Okay, one of these is, okay.
I appreciate y'all, and I always enjoy to come back here.
Yeah, it's always good to see you. You have a safe trip home.
Appreciate you.
Thanks, sir.
And then, did Todd, you know,
Yes.
I think we've already made it. I think we've already made it.
Oh, awesome.
Okay. And we'll go ahead and just finish the rest of the stuff and then we'll do it.
Sure.
Okay, so, let's do our new business for the consent agenda. Did anybody have anything on the consent agenda they wanted to pull out and talk about or have a question? I do want to say how much we appreciate Phillips 66 Company giving us $22,500, and they gave it to us for the junior high playground and also for digital library. So,
They put money back in the sign.
how about the sign? Did they put money on the sign?
If I remember right.
I'm sorry, I didn't hear the
The
question.
sign, how much did they give us on the sign?
It was 12,000 something,
12.5 or something.
something like that, yeah.
For
It was
part
a
of the
little over
sign?
12, yeah.
For part of it.
Yeah,
The
we
whole
paid,
cost was
yeah,
12.
yeah, for part of it. So, yeah, we really do appreciate that. The junior high is going to get, really helped with that playground. So, okay, so I need a motion if no one has anything else they want to say.
I move to approve the consent agenda items 1 and 2.
Okay, I have a motion from Doug. Do I have a second? Second from Rusty. All in favor? No opposed, motion carries. All right, now let's talk about the budget amendment.
Who was the second? I'm sorry, I missed.
It was Rusty.
Thought I had it, but then it didn't say. Okay, sorry.
All right.
On this 2021 budget amendment, some years he has us book the commodities, some years he doesn't. This year he had us book the commodities, so we needed to do an amendment to add to the budget for we get commodities free from the USDA, and it's a little under $24,000 that we get. It comes in both as a revenue and as an expenditure, so it doesn't actually change the line items, but we just have to put the line items in there to book it. And so he requested that we book it this year, so that's the amendment to show that, the commodities.
Okay, does anybody have any questions? Okay, I need a motion.
I move to approve the budget amendment for the 2021 budget.
Okay, I have a motion from Rusty, a second.
Second.
Second from Chad. All in favor? No opposed, motion carries. Okay, the TEA Winter Storm Uri grant.
Okay, so this is something I haven't talked to you about before. TEA set aside some money for Winter Storm Uri damages that weren't paid by any other thing. I suspect we're not going to qualify, but we won't qualify if we don't ask. And so I'm gonna ask them to repay us $700,000 for the repairs to the elementary. Now, I can't do the roof, but I can do the rest of it, and I can't really do the testing. But the $700,000 is the ServPro. We got, insurance ended up paying us, didn't write it down, it was a little over $120,000, I think, is what insurance ended up paying us, total. And so that's, the $700,000 is ServPro Amarillo, ServPro Lubbock, the Dave's Mechanical for the repairs, and all the construction company, minus what insurance paid us. And so then I'm gonna ask them to reimburse it, because what the designated purpose is for anything that wasn't paid for by FEMA or insurance. Well, FEMA told us no, because they said it wasn't a direct result, it was an indirect result, so we weren't eligible. Insurance told us no, because it was directly in their thing that said they don't cover mold. So we're gonna ask TEA to pay us out of this fund. We'll know fairly quickly, we'll know by mid-February whether or not they grant it. It's worth a shot. So I just have to have approval to try. So,
They give any explanation why it wasn't a direct result?
on the
Or they
FEMA stuff.
just saying it, no?
Well, when I didn't directly talk to FEMA. I talked to TDEM, who talked to FEMA, who talked to me. And what they said is what they pay for, what FEMA paid for, was like the ServPro. If it hadn't been covered by insurance, FEMA would have picked that up, the directly sucking the water out of the thing. But the water getting up into mold and walls, they said FEMA would only cover that if you could prove, and I can't remember the exact wording, so I'm paraphrasing here, but if you can prove that it was never present prior and that it was directly caused by this only. Well, there's no way for us to prove that.
Right.
That's an impossible thing. Now, we only had mold in the areas that flooded, but you still can't prove it. And so the TDM person told me, you can't apply. So we did not apply. We initially did a FEMA application, and then we withdrew our FEMA application based on the recommendation from TDM.
I was just curious, they're the ones that asked you that, well, not them, they asked you to, conserve heat, electricity, gas, and all that.
Yeah.
Doesn't pop us, so I don't see how it wasn't an effort.
Yeah. So that was their rationale, is that it wasn't a direct, like they said, what FEMA was paying for is like, if your building collapsed and you had bulldozers come in and move the rubble out, that was something that the FEMA disaster relief would pay for, not, the long-term effect of the water sitting there and the walls being wet and stuff. So and that's what I put in my application. I said TDEM told us that it wasn't applicable for the FEMA, because TDEM was handling all of the, there was just too many, FEMA couldn't do it, so TDEM was doing all the legwork for FEMA. And so TDEM told us no, the insurance told us no, this is how much we have left over. So, like I said, it's worth a shot.
Yeah.
You never know.
No, doesn't hurt to ask. All right, does anybody else have any questions? Okay, do I have a motion?
I move to approve the application for the TEA Winter Storm Uri grant.
Okay, I have a motion from Chad. Do I have a second?
Second.
Second from Billy. All in favor? No opposed, motion carries. All right, Budget amendment again on 2010.
So this is the budget amendment for the HVAC for the gym that we did last meeting, but I don't really need you to approve it because we got our final bill for Page and Associates for the construction at the elementary, and they came in 113,000 under estimate. So I have 113,000 extra in the budget for 51, and the elementary roof was, the HVAC units were 91,000. So I've got enough money out in 51 to cover it, so you really don't need to approve this budget amendment. We still left it on the agenda just so we could talk about it, but we have enough money in that account, so and it's the exact same account that the HVAC would come out of, so we really are fine.
Okay.
We can skip this one.
Okay, all right, so we'll just table that one. Okay, district investment policy, who wants to talk about that?
I guess I'll go too. I really should have just put this in consent agenda. This is a thing we do every single year, and it's just our policy. Our investment policy is our policy CDA local, and it's just a standard policy written by, I believe it's a standard policy written by Desmond. Yes, it's their standard policy A for investment policies. So the only significant thing of note is that we can't do investments longer than 1 year. So like I can't do a 2 or 3 year CD, which in today's environment, that's fine. So
That was about the only change to it.
it didn't actually change, it's just that's the only thing of note in the investment policy.
All right, does anybody have any questions about that? Okay, do I have a motion?
I move to approve the district investment policy.
Okay, I have a motion by Rusty, do I have a second?
Second.
Second from Doug. All in favor? Okay, no opposed, motion carries. And the joint election.
Actually, we can't do this one either because Sanford called us and wants in on the action as well. And so since we have it on the agenda just to do it with Fritz, we will need to do this at the next meeting.
Okay, so we'll table this for the next meeting. Okay, let's see. Richard, I think you want to give us your monthly report?
Do we want to do the two public forums, or do you want to do those last?
I think let's just finish the meeting and then we'll do them after the meeting.
Maybe somebody should.
Yeah.
Yeah, okay. Then in my public report, in my reports, there's really two things to show or to talk about. One, we came 113,000 under budget in their page construction, so that was actually a really good thing. Also in the details report, if you'll scroll down to the where it talks about the federal funds, you can see that we've actually started to get some of that ESSER money in. Like Mark was saying that, oh yeah, we got it in September, October. No, the wheels of the federal government and all the paperwork move much slower than that. But we have got those ESSER reimbursements for the money we spent last year now, and then we'll start to do the drawdowns for the money we spent this year, hopefully within the next week or two. So that's something of significance. One of the other things to talk about, and the thing I usually talk about during the audit, is do you guys have any questions on this? Because I know the go-through was pretty, when he ties it back to all those charts and you're flipping back and forth, I know there's just a lot of stuff there. I'll mention a few things. Like, for example, he said it, but I want to make sure that you guys are aware of it. Those pension liabilities, those are not something that we are liable for. I mean, it's something they make us put on our books, but they'll never make a district pay that because they can't. Because like when somebody retires from the district, they're no longer our employee. And so that liability, yeah, it's out there, and they came from Fritch, but they're not really our employees. So that'll always be a state liability. They just, I don't know, it was probably 6 years ago they started making us put it on the books. And so it makes our net position look like in the negative because we have all this liability from the state, but it's not something we will ever pay. Oh, I did write down one thing on Rusty on the question you asked him. They do. So like the contributions that we make, and I'll just use myself as example. Like I think there's 136,000 that I've contributed through that 7.7 or whatever it is. Maybe 100. It's somewhere between 130, 180. I don't remember the exact number. So it really depends on once I retire, how many years do I live?
Right.
And so will I, or I could, so say I just decide, okay, I'm going to get out of education and I'm going to go do something else and I need a bunch of money, I can pull every dime that I've contributed. And then my defined benefit goes away, but I still get that money back. So.
Okay, so it's not, I guess what I was trying to get out of him was, it's more of a guaranteed retirement, right?
It is.
It's their
It's-
social security.
It's a
Well, I
defined
know, Social
benefit.
Security's not guaranteed.
Well, it's,
I mean, these young guys here, may never see it.
Yeah.
well,
And they may not ever see
They're
it, the
paying
young
into
guys.
it.
it's as guaranteed. I would say it's equivalent, just like it's as guaranteed as Social Security is because it's underwater too.
Yeah.
Okay.
But the state of Texas is never going to let it go. And so, but the cool thing about it is, okay, say that 136,000. Say I retire and I'm getting, I don't know, 60,000 a year. Or I'm just going to throw that number out there. In 3 years, I've equaled what I've put in, and that's why the liability is so large. Is because in 5 years, I've made 120,000 that I didn't put in. And so being a defined benefit, it's really good as a retirement, but it's really bad on the books because you really need a bunch of assets out there to cover it.
Okay.
Because
So,
they don't have social security.
Yeah,
come out of their checks.
I just wasn't sure how TRS worked.
yeah.
It's-
So, then other things to notice, we did go down in our fund balance, 699,000. That was actually better than expected. I anticipated 800,000, so the ESSER money made up that difference. You know, we put 500,000 in the year before, and if we hadn't had the repairs, we would have only taken that 260. The money that we were overpaid would have been really only our decrease in fund balance, which it was
265, I think.
265, I think, yeah. So we were actually doing better than I had anticipated from 2 years ago. I had anticipated we'd be about 500 negative. We were 265 negative because of our enrollment. So it was actually better than I had projected. So if we get the money back either from, and we'll talk about, is it next week we do our workshop for the bond?
Or the 17th.
Either we'll get some money back there to put back into the fund balance, or maybe if I get this grant, we can put some money back in the fund balance. But really, considering how much we've spent, the 699 in the hole is actually pretty good. Now, I will say, now this is something I talked about with Jason today, this is a snapshot. This is a snapshot of August 31st. So a fund balance is really a fluid thing. If you ask me, what is the fund balance? Well, it changes every single day because we spend money and then the next day we'll get money in. And so the fund balance isn't it's not a static figure that lasts all year. It fluctuates. But what you do is you compare that static snapshot because that's something you can control. It's the exact same time every year you look at it. So that's why we talk about it in the deal. But so I was still fairly happy. The other thing I was fairly happy with, 48,000 to child nutrition. That's the lowest we've transferred to child nutrition since I've been doing this. And it's going to be less this year.
I'm anxious to see what it is this year.
So do you
I
think
it'll be
getting
good.
rid of the food service is really gonna help us,
Well,
that we were paying out?
that was $70,000 to $80,000 of expense. So
Yeah, well, that's what I mean, yeah.
yeah.
I mean, it's gotta be
Yeah.
substantially better.
This year's going to be weird because we get reimbursed for everybody that eats, but our costs have skyrocketed. But right now, as of December 31st, we're at a negative 1,000, which is pretty good. So we're probably going to be close to break even. We'll never make money on our child nutrition, but we'll be pretty close to break even this year, I think. But it's a weird year. But even after this, I think we're still going to be a lot closer. So that 48,000, that's a pretty good figure. some of our friends to the north, they put in 200,000-300,000 into child nutrition, so.
I just remember that we'd all been pretty close to zero.
Well, that was before they did all those regulations
Right.
in the Obama era. They changed what we could serve, and the cost of food just drastically changed.
Right.
I mean, we used to write some of the payroll person's salaries, and we used to write a whole bunch of salaries to 240 and still be close to zero. But regulations changed, and it started costing a lot more to do child
I remember
nutrition.
when the Obama
Yeah,
one did, it really hit us hard.
yeah, it really changed what we were serving. So.
Right. So do we still have to follow those guidelines?
Yes, we will, and as long as we take federal money, we do. And we get a significant amount of federal money for child nutrition, so we would keep taking it.
As long as we're handing it out.
As long as we do. Okay, does anybody have any other questions? Is that, you good with that? Okay, so Jason?
Our enrollment dropped a little bit in December. We've had several enroll for the upcoming semester. We have lost a few more, so I think that number is going to stay pretty close to where it's at. The total refined ADA there was actually for the month of December. It's not for the total month, so I think it's closer to, what was it, 614?
614 and
And
change.
so, I don't know why I put the December, but I did. And so, and then attendance, as you can see in December, before we went on Christmas break, we got hammered pretty good. And so, especially at the elementary, there was a lot of flu, sickness, COVID, all that type of stuff. And so, we're hoping that that goes up. And so, then my Midwinter Conference will be the end of the month. It's the January 30th through February 2nd. And then there's PSLA, I didn't put that on there. It's February 9th. And I didn't put the calendar on here since I sent it to you in a separate email, but several things going on. Basketball, the girls started district play last night. The boys still have another week or so before they start. And so it's just fast and furious and starting to get, into the spring where we've got all sorts of stuff going on, so.
So are we going to be able to, because we talked about it, look at last year's, some of the days and punt on the attendance?
We, in fact, Richard and I talked about it, was it yesterday? Today. And so we, looked at some of the days, and Tanya compared them, and there are some days that, we're going to hold off on the applying for the waiver. We have until July to do that, so we're going to wait and see how it all, levels out to see, what days we do need to apply for. And so then before July, we'll get that taken care of and get the waivers taken care of.
So, the attendance was already, not the best, but there was enough COVID to make it look like this, or are we still having attendance issues?
Just sickness, in December. I visited with the principals. We have an admin meeting on Friday. We'll address it again. Honestly, it's really just, kids quarantining for 10 days and that type of deal, or getting the flu, and then, that really just sickness just hammered us. There was a stomach bug that went around, and so I feel like, I'm not sure about this new strain of COVID, but they're saying that it's more contagious, so I don't know. We'll just have to wait and see and stay after the ones that, I know Mr. Vanderpool, for example, at the high school, he's had parent meetings and that type of deal and made contact with parents with kids that, are missing, not necessarily because of sickness, because of other reasons. So he's staying on top of that. So I feel like these numbers will increase as long as, again, who knows with this new COVID, so.
One of the things to note on those waivers is it doesn't give you the attendance rate of the previous year. It just makes that day go away. And so that's the reason why to wait towards the end of the year is to see, you know, do you need those minutes? Even if it's a low attendance, do you have to have those minutes to get enough to have the full funding for the year? So, and we were just barely eligible for the waivers, so on some days, and only at a specific campus. So it's definitely something we'll have to look at the end of the year.
All right, so we do have the workshop on the 17th at 6. And then we also need to set a meeting for next month.
What is the meeting? Did you say workshop?
The workshop is the 17th. It's on Monday. They're out of school, and the principals are going to come.
So
the
where are we doing
admin's
it
going to be
on?
there. We're doing it on
The bond.
the bond. And is that all we were going to do? Or was we going to talk about other things too?
6?
We talked about some different things, but yes. Okay. Somebody tell me, because I keep going to the calendar up on this.
Can't do
I always have to watch.
Where's the calendar at?
It's, I think you have to click where it says Wednesday, January 5th. No, that's not it?
That's
Okay.
it.
I don't know.
Well, on board vote.
I'll make a note to have them make sure their calendars up on
I
there.
usually just grab my phone. I can do that faster.
I just,
Calendar lab.
Right there. There you
Where is it? Oh,
go. City board vote.
oh, there is one in board book. I don't ever look up
Chad got her
there. Goodness. Somebody does.
Chad got it here.
Okay.
That's pretty sad.
we do because of the election, the deadline for the election, calling of the election, we have to have the meeting prior to the 18th of February.
Okay. All right. So, is Wednesday still the best day for y'all, or we're starting basketball, or doing? Logan's just smiling, he's like, I don't know. Is there a good day?
Wednesdays is about my only free day.
What day?
Wednesday.
Well, then you better put us down. No.
What is the best one? Tuesdays and Fridays? Is that right? Tuesdays and Fridays.
Junior versus Tuesday and Fridays.
Okay, we can either do, what about, is Mondays anything? Would y'all rather do Mondays than Wednesdays?
In case we have guests.
Yeah, works for me.
Okay, all right, so let's do the 7th. I don't think y'all want to be here for Valentine's Day.
Just another day.
Just another day, that's all. Okay, February 7th at 6 is our regular meeting. And then January 17th is our workshop.
I told you, didn't I?
That's where I just got my. All right, so that's all I had. And then, okay, so let's go back to the top and let's do the public forum for financial integrity, the first rating report.
Okay, I believe we talked about the first rating in a prior meeting. We scored 98 out of 100. We only got a 2-point deduction for the ratio of debt to assets. That same table that he points out is the only thing that got us any deduction. So, other than that, we met all their criteria, so.
Okay, so do we need to open the public forum at a certain time and then close it? Is that how we do it? It's
I
been a
marked
while.
7:10 as your open.
Okay, 7:10, well, that's what I was gonna write down. Okay. Rusty did too, that's what he was, yeah, they did the same thing.
Lock them off.
Yeah,
Thanks, Chad.
thanks, Chad.
Don't use the calendar on the floor.
Unless you hit the back button.
Yeah, that's what you do.
There you go. Okay, so, does anybody have any discussion about the first reading? Any questions? Did y'all look? There's no one here to speak, so if you don't want to have a question about it.
The disclosures, there's a little more data in them than in some years past because we've interpreted the requirements differently. Because like what you get reimbursed for things has, in the past, been interpreted as, this is directly if we wrote a check as a reimbursement to you. Well, that's really not what it says. It says any money that you were given. So we put the money in there like, you went to some meeting. You didn't go to TASB that year, but you went to something. And so if you scroll down at the disclosures towards the bottom, there's some amounts in there that these are monies that were spent. So like it was spent for meals. Wendy and I went through all of the money that were for those trips. And we looked and see which was for hotels, which was for meals, and then put it in the appropriate category. And then there's one other disclosure that's, how much money does the superintendent get on a side business? I have no idea for our previous, and so I did it for him, which was 0. So.
No side hustles.
No.
No time? Okay. Okay, no one has a question or comment about the first reading. Then we will close the public forum on that at 7:13. And we will open the public forum on the TAPR report.
The TAPR report is the Texas Academic Performance Report. Because of COVID, we don't have an accountability rating. What this is, it just takes all the testing scores and it breaks it all down, and if they got got meets or mastered, or it breaks it down in different demographics. I really don't like this how these charts. I tried to break it down for you on these charts because it had all the different, like Pacific Islander and 2 or more races that we don't have students in, and so I deleted all those and tried to make it a little more user friendly. And I know it's not very user friendly, but it breaks the approaches there where they passed or not, and breaks it down into different grades, and it keeps on breaking it down into masters, and so there's a lot of information within this. I think there's 90 something or 100 slides on this, and so there's a lot of information in it. That's why I sent the TAPR report out to you, and so that way you would be able to, because to me I have an easier time looking at the numbers than I do these bar graphs. And so
I have a question for you before we go. So 70 is not always passing, right?
right.
So
And in fact, most of the time it's lower
some of
than
it's
that.
like a 20.
Right, it's low.
So it's really hard to read the graphs if you really don't know what you're looking at.
Right.
Exactly.
Yes.
Sometimes you're like, oh, that doesn't look good, but really it
It's
it
really,
is
really good,
because
yeah.
It's not.
More
So,
than 50 and it's,
yeah. So as an educator, what is your takeaway from it? Like we've looked at it, so what Like,
Well, I mean,
what's the highlight, I guess?
you know, you look at it at, you know, in the actual report, it compares it to the state, the region, and that type of deal. So, you know, it's, you know, our goal that, you know, we want to be at or higher than the state average. And so, you know, in a lot of areas we are and some we're not. And, you know, in a lot of those areas are the areas that the reason we've been, you know, in the improvement. And so we've been working on those areas already. And so really, I mean, you know, there are some highlights to look at. I mean, you know, and it's hard to compare, you know, really you can't compare like 21 to like 19 as far, because those are total different groups of kids. I mean, you want to take the kids as third graders and say, all right, how did they do as fourth graders? Are we getting better? Are we getting worse? What areas do we need to improve on? So that helps in this. And the principals, they have this report. We're going to discuss it and go through it and make sure that, you know, we're looking at areas that we need to be looking at, and they're already doing that. So, I mean, you know, and a lot of the DMAC data and things that we're already doing, you know, are going to correlate to these scores going up. And so, I mean, there's a lot in these reports. I mean, and it goes.
So what is the highlight, would you say?
I mean, improvement. I mean, we improved in several areas.
Like
Yeah.
8th grade reading, that's one that stuck out to me, I think. I think that was one.
Right. Well, and if you looked at, you know, U.S. history at the high school, you know, 100%, you know, and they did well. And, you know, we're not just striving to pass, honestly. We want to do the best we possibly can. So if you look at, you know, the meets there, you know, 92% got meets when the state average was 69%. I mean, that's pretty outstanding in my opinion. And, you know, and then the mastered, you know, 42%, and the state's at 43, so we're right there with them. So, you know, and we improved in ELA at the high school. You know, we did a good job there as far as improvement. So, I mean, I think there's several areas that we can be proud of and that, you know, we can hang our hats on, and then our teachers did an outstanding job getting our students. And then there's other areas where, you know, we're not there yet. We just got to keep working and getting better and trying different programs to see, you know, and what works for our kids. So
how do you see us at the elementary? Are we progressing?
yes, I definitely think we're progressing. And especially,
That's where we need to progress, though, is at the elementary at this time, right?
you're right. And if you look at, you know, those kids, you know, just a couple years ago missed half a semester of instruction when we didn't come back from spring break. So, I mean, you've got to take that in consideration too. You got to look at that. So, no, I think we're progressing where we need to be. There wasn't any like areas to me that I just thought, you know, we're done, you know, or anything like that. I mean, you know, I think we got programs in place and people in place and teachers working hard and kids working hard, and, you know, we're going to give it our all, and I know they are, so.
I think that's what we just want to see is,
We're
as
not
long as we're progressing.
Right.
We're not digressing.
And
No.
not degressing, yeah. I mean, that's what.
You know, and you have some areas where, you know, it's, like I said, it's not where we want to be, and so we're just going to keep getting better, and hopefully what we're doing works and those numbers come up. If not, then we need to go back to the drawing board and figure out what we can do to get these kids better, and so.
Okay. Does anybody have any other comment or question?
About slides 3 through 101. Starting at number 3.
Yeah. Okay. All right. So there's no one here for public, so we're going to close that forum at 7:19. I thought it looked pretty good. Yeah, there's some places, but that's good. You know where they're at. I have one more thing before we adjourn. I forgot to say it during mine. The PASB grassroots meeting is on the 13th, next Thursday. Mike plans on going. It's at 6 o'clock at Region 16. We normally, if there's quite a few of us going, we'll meet up here about, what, 5:15? and drive a Suburban over. They feed us. At this one, they will give away a $500 scholarship. And so we've done, the last couple of years, we've actually got one.
Every year.
Yeah, it's not guaranteed. I mean, the last couple of years we have, but we have to be there, so somebody has to be there, which Mike said he's going, but does anybody else know about planning on being there or going? Okay.
Send out a reminder.
Yes, sir.
And then,
Calendar up there.
They ain't falling for that.
all right, I may be out of town, so I probably won't be able to go.
I'll probably go,
All right, and so Billy might go, so if you will have,
depends on the weather.
all right, if you'll have a Suburban maybe ready,
Okay.
were you going to go?
Yes,
or not?
yes, I was
All right,
gonna go.
all right, and so Jason, all right, so there's enough for definitely a ride. So if y'all do decide you want to go, just shoot Jason an email, he'll send us that remind, and, I mean, the PASB meetings are really good, they're very informative, and then this one, you know, hopefully we'll get another scholarship for one of the kids. The way we do it from the board is, if no one on the board has a senior, then what we usually do is we have a essay. They can send the essays to Tanya, she sends them to us, and we look at them, and we choose one. And we have certain requirements for the essay, so that's the way we do it. All right. Okay, so I make a motion to adjourn at 7:20.
Second.
Second from Billy. All in favor? All right, you're adjourned. Thank you.